ECR Minerals, well, welcome, ladies and gentlemen. I am delighted to be here, and I say that seriously. Most people say they're delighted to be here at these events, but I really am, because at the start of this year we had in excess of £1 million worth of debt. We had no real access to finance. We had a terrible situation really where the markets were turning against every company and turning against ECR because it had failed to deliver for a considerable period of time. Our debt was due for repayment by October, so now. So had we have not done certain things in the interim, we would have been in severe trouble. And it created a few sleepless nights and a few concerns at the start of the year, but we just believed that if we kept going and we focused, that we could find a way through. We got a great team in there and it's worked out, but we've got a lot more to do. So I wanted to take you through various elements of what we've done. It's not a technical presentation. I'm a chartered accountant for my sins. That gives me certain skills, but it doesn't give me others. So I have a good degree of knowledge across all areas of the business, but from a technical perspective, we're going to come back and we'll do another technical presentation when our operations are fully running. But I just wanted to make you aware of the story. The first thing I have to do is put the disclaimer up. I can summarise for you. We're not telling you to buy or sell ECR shares, just watch them and watch what we do in the context of what I'm taking you through today. Don't place any reliance on the information contained in the presentation in case it's wrong or in case I say anything wrong, which there's always a reasonable possibility of along the way. I'm used to introducing MiningMaven presenters and I feel really sympathetic now to the people in the past that I haven't really cared for. I've just put them in front of you all and now I see your beady eyes staring at me. I know what it means. And then the presentation may contain forward-looking statements. We're crystal ball gazing. My crystal ball I can see a little bit more of than perhaps you can, and I can't tell you all the things that we're doing, but we are looking into the future, and I certainly hope some of the things that we do or we are doing at the moment will transpire and crystallise real value for people holding shares in the company. Now, can I be cheeky and ask who in the room holds ECR shares at the moment? Okay, right, Joe, thank you very much. I honestly don't know if that's a good or bad thing, that proportion, but I'm going to go with it's a good thing, especially the gentleman who sat 5 feet away from me, who could get quite leery if I say the wrong thing.
I'm not Sheffield, don't worry.
Okay, about ECR Minerals, just to give you a quick summary of the business, we have an exclusive right and option to earn a 50% interest in the Itagon gold silver projects in the Philippines. Advanced exploration, we're going to go through that in a little bit more detail shortly. We hold 15%, about 11.6 million shares in the MAC Resources Group, and we have 10.5 million 28-cent warrants that expire around March 2016. 100% ownership of the Sierra de las Minas project in Argentina, a gold project. We have an Australian subsidiary that has Australian dollar 77 million tax loss within it, that's currently under an administration process and one hopes shortly to come out. During 2012 and 2013, the board of ECR has been considerably restructured and the business as well. And none of the original founding directors are involved in the business. I have to say that because it's on the screen, but forgive me. Whether that means anything to you, I don't know. Shares in issue are 3.3 billion. Give or take, half a share for every person on the planet. Not a healthy situation to be in with regards to number of shares. It creates a good degree of liquidity and interest. You can become an ECR millionaire for £3,500 or thereabouts, but it's not ideal. It's symptomatic of the difficulties that the business has been through. And market cap at 0.35 pence, I think it's slightly higher at the moment, is getting on for around 11 to 12 million pounds. Okay, there's the board of directors, me, chartered accountant, numbers basically. chartered loss adjuster. I used to handle large commercial insurance claims for factories that had burnt down and so on, financial firms that lost their data centres. I'm also a member of the Business Continuity Institute and a member of the Chartered Insurance Institute. So kind of everything you need for a company that's having a bit of a disaster in its operational life. Stephen Clayson, Director and CEO. Stephen is often referred to as being very young, and something at 44 I don't like very much, but because he's a lot younger than me. He's an incredibly talented and capable individual, can turn his hand to all sorts of things that we've required within the business, and he's experienced and knowledgeable beyond his years, and people focus on age, and I think it's wrong. And then Dick Watts, who is of course very old and very wise, and he's our hard-headed, straightforward, technical chap who tells us what is good and what's not, and he doesn't use many words to do that. He's very much to the point, and exactly what we need for a company that struggled with projects that haven't been really economic over the years. There's the history. I don't want to labour too much on 2004 to 2012. Lots of difficulties, lots of challenges. We live in a risk business. Many things can go wrong. When you're in a listed company, it accentuates the risk that you would find within a normal private business. Everything from funding and finance through to operations, through to management, everything you do is in the public domain. If you have a normal job, you get one job appraisal a year. In my job as chairman of ECR, I probably get 30 to 50 appraisals every day. And most of them, regrettably I suppose, are judgmental and negative, but that's what I have to accept and understand. But needless to say, none of the projects or the endeavours that have been undertaken by the company have generated a timely, efficient return for shareholders, and that's something that we need to change going forward. So the changes in March 2012, I don't know if any of you were at the AGM, when two of the directors were removed from office by the shareholders. That left two directors in office, Patrick Harford and Stephen Clayson. They needed more. So I joined as an NED, non-exec director. Keith Irons joined as non-exec chairman, and Dick Watts as another non-exec director. In May 2012, pretty quickly we had a different strategy in place. So realising value from a number of our assets, exploration and development in Argentina, and divestment of non-core assets, principally ACS Asia. This was a metals manufacture business, which you wouldn't normally find within the wrapper of a exploration and development business, but it was there. And it was taking a huge amount of time and money, and it had to go, so it went. Financial climate in 2011 started to deteriorate, particularly for our sector. Some people think it was Fukushima when it started, but it was probably the European crisis in the summer. And it carried on, and obviously we're still in that crisis zone. 2013 is terrible, just as 2012 was terrible. But I suppose we have to own up to a mistake, in that we thought the crisis would not last quite as long as it did. We thought the recovery would come a little sooner than it has, but if we've made that mistake, we're not the only company and individual to make that mistake. It has lasted for quite some time, and we had to get through it. Now, you don't restructure and reorganise a business any time if you can avoid it. You certainly don't do it in a natural resource sector crisis as a company listed on the alternative investment market. Everything is coming together at the wrong time for that kind of activity, but that's what we had to do. We were told by investors that the MAC Resources asset, the Argentinian asset and so on were very valuable to them, and they wanted us to keep those assets and to do nothing else. We were also made aware that unless we diversified our business into some new project areas, we wouldn't get the support that we needed from a financing perspective. So we had to start to look for alternatives. So we went for Itigam. That project enabled us to raise money, and we raised 850,000 in May and June 2013. We raised 400,000 at first. The volumes were incredible, and it presented us with an opportunity to go and raise another 450 shortly after. I hate back-to-back placings. They make investors so nervous, but we needed money and we had to go for it. So we went for the second placing. And that enabled us then to go into active negotiations, seriously active negotiations with the convertible loan note holders and the holders of our loans other than the convertibles, and arrange for repayment of the loans, which for the £800,000 convertibles we did at half cash, half shares at 0.1. And that took away a wall of worry. We felt that if we took that wall away, investors could start to look at the stock a little freer, and we might start to see a bit more liquidity and a bit more trading and interest. And it did work. We included within the deal a 0.2 pence warrant, so at twice the share issue price at the time. And if our shares traded above 0.25 for 10 consecutive days, we could accelerate that warrant. We say to the warrant holders, use it or lose it. And that enables us to raise another nearly £800,000 on the exercise of the warrant. 100% of the warrant came in. In addition, we raised £500,000 at 0.3132 pence a share. And the net result of all of that was we started the year with over £1 million debt, and where we are now is we have over £1 million cash with no debt. Completely different business. And I can't tell you how important that is, because I know what projects we're looking at and the type of stuff we're engaged with, and £1 in the bank now is worth £10 in the bank a couple of years ago. You will not believe the power that gives you in terms of engaging with people seriously and the opportunities it gives you. And we're not about to go on a spending spree because we have £1 million. It feels quite good because we haven't been in that position for a considerable period of time, but we're just as cautious as ever. But it certainly opens up opportunity to us. Okay, Itigan. There's all the details. I'm sure if you're familiar with ECR, you will know it inside out. It's an opportunity to earn into 50% of a project, subject to getting a mining license for that project. It's a gold-silver advanced exploration project in the Philippines. At the back of the presentation in the appendices there's more information. Historical work was undertaken by BHP and Caverna Davy. We have quite a set of drill data from 1987. We obviously have to bring that up to date and validate it, but it's quite interesting. We have some good intersections, good grade. The project itself has a target in a technical report that was lodged in Canada of 500,000 to 1 million ounces of gold. We have a deal structured so that the maximum we will pay before we have a good knowledge of the project is $100,000. Then we get to work on the ground, and if this project has the potential that we think it does, then we have further stage payments to make. Once we get the mining license, we contribute equally with Tiger, our partner, and any party that doesn't contribute is diluted. And we'll have to see how that goes, but an expectation would be that we could end up with a larger position in that business going forward. We are awaiting the famous exploration license renewal. This has taken longer than we anticipated, and I get questions all the time about this. People, I think, recognise that the project is interesting and they'd like to see us operational on the ground. So would we, because for a relatively small amount of money and in a relatively short period of time, we can get a lot of data on the project and find out if what we think is there is there. In this part of the world, as in many jurisdictions, sometimes things take longer than you would like. We're expecting the confirmation in the near term, as we've announced. Nothing has changed. If we thought it was going to take a considerable period longer, we would announce that. We're not going to be shy and move away from negative announcements. But at this point in time, we expect it in the near term. So every day we wait for the post, literally. Any questions about this, please feel free afterwards to ask me, or when we're having drinks and so on later. There's some maps and pictures, because we have to have some in there rather than all words. The reason why we selected it is on the basis of these 5 characteristics, which we drafted a short while ago. Realistic financial commitments. We can't spend serious amounts of money. We don't have it. We might have £1 million, but that is not a serious amount of money in this business. That can go tomorrow if you're running around with gay abandon, spending money wildly. Security of tenure. Philippines is an established jurisdiction, and we obviously don't commit to anything until we get the EP renewal. We have strong potential to add value technically. There's no impediment to management of that project from a local team or with our resources based in London. And overall, we can articulate the potential to investors. Too many projects in our world today in natural resources are complicated. If we cannot, in simple terms, explain to investors who have a generic understanding of the natural resource business why we should be spending their money on a project, we will not do it. And that's a simple hurdle that every project has to get over. Okay, so £1 million debt to £1 million cash, bit of an odd story, with a few sleepless nights in between. Now we're free to focus on creating shareholder value through operations. Very important for us now that we shift from financial restructuring and emergency refinancing or refinancing into an alive operational set of activities with proper regular R&S that people can follow. And we're desperately seeking to get on with Itigan so that we can start that process proper. The current corporate strategy is commencing project operations at Itigan, ongoing review of all of our other interests. Nothing is sacred. You can't have within a business assets that you will hold on to forever. If you do that, the value never comes. If we get opportunities to realise value across the portfolio on a sensible basis, we'll take it. Now, some of you I know will probably be unhappy about the disposal of some of the shares in the MAC Resources earlier in the year. If you're a financially crippled company and you have assets you can sell, you sell them. You might not sell them for what you would like to, but you get cash into the business, and that's what we did. We're stronger now, so we can be a little bit more prudent and careful and thoughtful about disposal decisions. But we're still looking where we can to get value out. We're looking at other additional project opportunities. We're not going to go down the road of, as Warren Buffett would say, diversification rather than diversification. We want to get some additional things into the business on the right terms, the same as Itigan, that can provide us with good, solid stories that investors can follow and understand, and provide us with real upside opportunity. We're predominantly looking at gold, but we're also looking at a range of things, strategic metals, rare earths, and all the areas that we feel can provide some significant upside in the future. And as soon as we can announce to market some of the developments there, we will do, because we would seriously like to make some progress, but one step at a time. We're also going to maintain the open lines of communications with shareholders. We will speak to everybody, and if we have forgotten to speak to you, if you've contacted the company, it's probably my fault. As chairman, I have to take responsibility for everything that goes wrong, as well as things that go right. Contact the company and we will give you a call back. We've held investor evenings for one-to-one meetings with shareholders so far in Manchester, Birmingham and London. We've held investor weekends where they can call the board. We will do as many different things as we can to communicate with investors. Elements of the city I know doesn't like the private investor too much. We love the private investor because ECR is a private investor stock. And the whole city is reliant on private investors. So we're grateful for any form of communication. I don't mind if you want to have a rant at me, because on occasions I am a private investor too, so I would be ranting at me if I was in your position too. And there we go.